Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the credit scoring. So kindly do watch this video till end. We have already covered 6 chapters related to the retail banking and the wealth management, and if you want to go through those videos, do enroll right now and start preparing for the same. We are covering full course videos, case study videos, chapter wise previous year questions, mock test, mega mock test, and each and everything related to Rbwm, so as to clear the retail banking exam in the very first attempt. So what are you waiting for? Do join right now, and also simply on sign up you will be getting access to all the PDFs. So do hurry up and further do sign up right now using the website jaib.learningsessions.in and start preparing for the same. So let's start the session over here, and it's related to credit scoring. Now, what do you mean by credit scoring? Let's say the case that we want to actually lend to person A. We are basically taking example of a person A, and he applied for the loan with bank XYZ. Now bank XYZ will be looking for the different thing. The bank XYZ will be looking for the credit worthiness, that if the person A is credit worthy or not, and also will be looking to the income level the person A is having, if previous delinquency, if there is any or any past behavior where the person A has not repaid the amounts over there. So we'll be looking for the different things over here, and based upon that bank XYZ will be able to lend to person A over here. But in case of these particular credit scoring, the CICs, that is a credit information companies, they actually, based upon these different factors, they actually allot a score to the customer. They do allot a score to the customer, which is said to be the credit score, which make it very much subjective. Based upon the thing, the banks can easily be lending to that particular person, right? So now let's have a look at that particular part. So if we look at the different types of risk, first of all, it's better to understand the risk over there. So risk is actually the possibility that there can be a loss. So possibility of loss or negative consequences or due to the uncertain events or circumstances, that is particularly said to be risk. That is said to be the risk part over there. And if we look for the types of different type of risk, we are having the credit risk, which is due to the default of the borrower. Okay, and further there is business risk over there. Let's say case that a company's profitability is lost or due to the strategic factors, due to the operational factors, or they particularly have a negative impact on their image over there. That's particularly the business risk. And when we're talking about the market risk, now the risk which is caused due to the fluctuations in the market over there or due to the external factors over there, that is said to be the market risk. And further it's related to the operating risk. Now when we are actually working, human elements are there, and further it may be the case that the systems never worked. It may be the case due to the human error, the issues were there, or any fraud was there, technology failure was there, or process failure was there, or adequate internal controls were there so as to manage the things. So the risk is actually there, and that is said to be the operational risk over there, right? Now, as I told you, credit scoring is actually what? Credit scoring is a statistical technique or statistical analysis which is actually performed by the lenders and the financial institutions. They will be determining the credit worthiness of the borrower. They will be looking for the credit worthiness of the borrower over there, and further they will be giving a score based upon that. And in India, credit score is evaluated and monitored by the credit information companies, that is a CIC. Okay, now what is credit score? Credit score is a statistical number which is actually evaluated by the CIC, and for the based upon that a credit score is given, and lenders can be using these credit scores over there so as to perform the different functions. Let's say that a particular bank says if the credit score is above 700 only then they will be lending the funds to person XYZ over there, right? That can be the case, right? And this basically lenders can be using this credit score so as to evaluate the probability of the default that is actually attached with them, right? Further, credit scores can be ranging from 300 to 900. Now 900 is basically considered as the best score, and 300 is considered as the worst score over there. Now let's learn about the credit information company. Now credit information company actually does what? Now let's say case that we are having a CIC, that is a credit information company is here. Now this particular CIC will be having the different members, and the financial institutions, all Indian banking financial institutions, banking institutions, those will be members of these particular CIC companies over there, and they will be sharing the data related to their related to their borrowers with the CIC over there, and CIC will be collecting this particular data and will be analyzing this data, will be processing this data, and further if a request is made by the member, then the data will be given back to the member over there, right? Let's say case that person X has taken a loan from B bank and for the C, A bank over there, and particularly he also went to bank C for basically taking a loan, right? And for the person's bank C over here drawn a credit score, basically drawn a credit score, and particularly CIC is not already having the data related to the borrower X from bank A and bank B over there, and based upon the application the limit, the score was drawn and credit information report was given, that is CIR was given, and particularly it indicates that what was the behavior of customer X while dealing with bank A and bank B over there, and particularly based upon that C can be taking an informed decision. That's the main function related to CIC. So in short, I just want to say that credit information company will be collecting the data and will be maintaining the records over there. They will be processing the data, and further on demand they will be actually be submitting the CIR, that is a credit information report, to the banks over there. And further credit information companies, that is CIC in India, are actually licensed by the Reserve Bank of India. They are licensed by the Reserve Bank of India, and particularly they are governed by the CICRA, that is Credit Information Companies Regulation Act 2005 over there, right? Now let's understand the different and have a look at the different type of CICs in India over there. First of all, let's related to TransUnion CIBIL 2000. That's most important and for the most common kind CIC in India over there. Now CIBIL was actually incorporated in August 2000. So it was incorporated in August 2000 based upon the recommendations which were given by the Siddiqui committee. So you need to memorize that the recommendations were given by whom? These were given by the Siddiqui committee over there, and based upon the recommendations in August 2000 CIBIL was incorporated, and further it commenced the commercial bureau operations from May 2004. So it started the operations from May 2004 over there, and CIBIL is having more than 500 members, and 200 out of them are particularly cooperative banks over there, and the CIBIL score varies from 300 to 900, right? That's about the CIBIL. So CIBIL was actually formed in 2000 and started working in 2004 over there, and particularly it was formed on recommendations of Siddiqui committee. CIBIL score varies from 300 to 900, having more than 500 members, right? And after that it's related to Experian. Now Experian Credit Information Company was established as a joint venture, and it was a joint venture between several banks and financial institutions, and it was established in year 2006. It was established in the year 2006. So Experian prepares the credit reports of the individuals based upon the information that is actually provided by the different banks and financial institutions in India, right? And further it's related to Equifax. Now Equifax is also CIC. Equifax is also CIC. It was founded in year 1899 in Atlanta. Okay, it was founded in year 1899 in Atlanta, and Equifax got its certificate of registration so as to start or commence its operations in India in year 2010. So we can talk about the thing that CIBIL came in 2000, Experian came in 2004, 2006 over there, and particularly Equifax came in 2010 over there. So this is a foreign concern which was established in year 1899 in Atlanta, and further started working its operations over here in India in 2010 over there. Further, it's related to CRIF, High Mark Credit Information Services. It basically serves retail, agriculture, rural, MSME, and commercial and microfinance. That's actually related to what? That's actually related to CRIF, High Mark Credit Information Services. Okay. Now, let's understand the membership to CICs over there. Now, the banks, regional rural banks, cooperative banks, NBFCs, public financial institutions, housing finance institutions, whatsoever the companies who are actually engaged in the business of credit cards or similar cards over there, or companies which are dealing with the distribution of credit in any other manner or any other institution over there, they can take the membership to the CIC. they can be the member of CIC over there. Now let's understand the different provisions under the CICRA, that is a Credit Information Companies Regulations Act 2005 over there. So it is actually enacted and objective in a way so as to regulate the working of credit information companies, because we want to regulate credit information companies, and that's why CICRA is there. And further, Reserve Bank of India has further issued the Credit Information Companies Regulations 2006. Okay, so further previously CICRA was here, and other than that the regulations comes under the purview of Reserve Bank of India CICRA, that is particularly Credit Information Companies Regulation 2006 over there, so as for the smooth working of the CICs over there. Okay, now let's understand the different regulatory guidelines governing the CIC over there. First of all, it's related to the section 15 over there. Section 15 over there, that every credit company must be becoming member of at least one CIC. It is mandatory that every credit company which is actually giving credit must be becoming member of at least one CIC. That's mandatory. And further, section 17 of the CICRA basically stipulates that credit information company can be seeking and obtaining credit information only from their members over there, but not from the other institutions. They can be particularly be having the information and can be seeking the information from the particular member only, from their member only, right? Now let's have a look at the current scenario. Now all the banks and concerned financial institutions are to be member of all the CICs. Now it's mandatory that all the banks and financial institutions are to become the members of all the CICs over there, and no credit information company can be charging. They cannot be charging any kind of membership fees which is basically exceeding rupees 10,000, and they cannot be charging any annual renewal fees more than rupees 5,000, right? So this is also particularly a rule right now, that if you are basically taking membership, now it's mandatory that you are to be taking the membership of all the CICs over there, but still it's there that the membership fees cannot be more than 10,000 and annual renewal fees cannot be exceeding rupees 5,000, right? Now, what are the different concerns which are looked into by the CICs while they are preparing the credit score? They look for the defaults, like if there is default in the previous time, they look for the same. They also look for the payment pattern, that what's your payment history or something like that, and also they look for the previous searches or previous inquiries out there. So all these things are looked into while CICs are preparing the credit score, right? Now let's have a look at the managing the credit score. Let's have a look at the managing the credit score. Now, how can you be managing the credit score? That what actions we do take or what strategies those must be adopted that an individual or a corporate can be improving their credit worthiness so that they can be taking much more loan and much more prompt loan can be taken, right? First of all, it's related to credit utilization. Now, credit utilization means what? That if you're going, basically, let's say the case that you have availed a loan of rupees 100 lakh. Now, as per the standard rule, it says particularly that you should not be consuming. It should not be consuming more than 30% of the credit. So the credit utilization must be up to 30% only if you want to improve your credit score. That's the first thing. And further, you should not be defaulting in the payments over there, and also the other attributes like your payment history, your credit age, and the type of credit account. They also basically add to your credit score, right? Now, further, it's related to warning signs in credit score. What are the warning signs? Let's say case if late payments are being done by the borrower, or high credit utilization is there, or high debt levels are there, or multiple credit applications are being submitted by the borrower out there, or foreclosure or the bankruptcy is there, or inaccurate or suspicious information is there. These are actually the warning signals which basically do indicate that this borrower can be defaulting in the near times. This is not basically a verdict, but this is a warning sign that the banks may be looking into while particularly sanctioning the loans, right? Further, it's related to credit information report or the credit report over there. Now, the detailed document is given to you where the credit score, a statistical number will be mentioned, and also if any delinquency that will be mentioned. Other than that, what was the payment history, what payment due dates were there, and when the payment was made. Each and everything will be mentioned in a very neat and clean manner, and will be giving you a detailed report related to same that you can be assessing the credit worthiness, and further can be determining the credit score. Further, what are the benefits of using the CIR? that, definitely we can be doing the financial analysis very easily. That's the first benefit. It can be used as for the debt management. Let's say case if you're a borrower and you want to manage your debt, you want to basically manage your credit score over there. Definitely if you're looking for your credit score information report over there, and further you basically try to manage all the things over there so as to basically maintain your credit score, it helps you in debt management over there. And further you can be taking, being a lender, you can be taking better credit decision. Like let's say the case, I basically analyzed each and everything about the borrower, everything was working fine, but when I draw the CIR, it was not up to mark. There was delinquency, there was each and everything that is not shouldn't be happening over there. There were warning signs, so I can be taking a very important informed decision in that scenario, right? And that also helps in financial discipline over there, because you basically get a comprehensive view. You get a comprehensive view about your own credit history and the payment habits over there. And further it basically cultivates a habit of financial discipline, that you must be maintaining the things so that your credit score is maintained, right? Now what factors lead to favorable credit score? Now if you're paying the payments in time and regular payments are being paid, regular credit card bills are being paid, now you are basically paying the credit card bills in full rather than paying the minimum amount due. You are paying the credit card bills in full. And further if you are avoiding over leverage means it's not the case that you are basically applying for the debt again and again. If you are maintaining the strong financial records, if you are basically proper utilization of approved credit limit over there, now these are the scenarios which will be leading to favorable credit score. Let's say case if you have taken a housing loan, it's not the case that if you have taken a loan that your credit score will be deteriorated. It's not the case. It's never the case. It's just the case if you're paying the EMIs in time, if you are basically utilizing the credit card a portion, and further you are paying the credit card bill in full over there, and further you are not defaulting the payments. Now definitely in that scenario, if you're not over leveraged or something, definitely your credit score will improve over the time, right? And further it's related to factors leading to negative credit score. Now what are the factors leading to negative credit score? First of all, it's related to if excessive credit report inquiries are there. Let's say the case person A visited, and when you basically draw the credit report, you saw that person has already drawn the credit reports, let's say 10 times in the previous month, right? You can be getting an idea that this person is actually looking for a lot of debt, and further the person has visited already a lot of places but never got a basically debt from that particular institutions. Now you must be suspicious about the thing and you can be further inquire, right? And further it may be the case that bouncing of the checks were there, or the checks were dishonored, or irregular loan repayments were there, or it may be the case that you must have defaulted in your credit card bills over there, or too much unsecured credit was taken, or rejection of the unsecured loan application was there. You basically defaulted as a guarantor, or basically high utilization of approved credit limit was there, and non-payment of utility bills were there, or they can also be the case that there can be error in the credit records. It may also be the case. It's never the case that there is always particular thing, but it may also be the case that there can be error in the credit records over there, or in the credit score records over there, because there are lakhs of persons data in the database of the CIC company over there, and it may be the case that somewhere the error was there in the system, and the loan which you have not basically taken is indicated in your ID, in your credit information report over there, and you can be looking upon the same, right? We'll be discussing it later on also, right? Further, what are the advantages of maintaining high score over there? Definitely easy availability of credit. You will be getting the loan very easily. Quick processing of the loan will be there. You will be getting the benefits also. You can be negotiate the interest rate, possibility of waiving of the processing fees, and option to choose prepayment options also. So these are the benefits to you which will be there if you basically are able to maintain a good score over there, right? High credit score if you are able to maintain. Now there can be mistakes in the credit scoring. First of all, there can be the confusion related to names. Like I told you, there are lakhs of names which are similar, and those are present in the CIC database over there. Now things can go wrong, and further it may be the case that someone else defaulted that is indicated in your ID. That may be the case. That is the first mistake. And the other one it's related to, it may be due to human input error. Let's say the person who was inputting the detail related to your repayment details or something, there was some issue related to it, because these CICs are going to take information from the members only. Now if the members data was submitted wrong, now that particular wrong data will be maintained over here. So this can be the second issue over there. And the third one, it could be related to impersonation. That could be the identity theft also can be there. Like particularly a person use the IDs of person B so as to take the loan. Now particularly when the CIR of B person will be drawn, it will be indicating that the person B has taken the loan because the particular identity theft has been taken in that scenario, right? So that can also be the case. Now, how can you be troubleshooting the credit score over there? First of all, you need to contact the banker. Now, we must be reaching out the banker because let's take the scenario over here that person A over here, visited for the loan over here and particularly visited to bank XYZ. Bank XYZ drawn the CIR over here, that is credit information report was drawn, and particularly they rejected the loan. Now A must be reaching out to XYZ that what was the issue with the CIR, and the person A must be asking for the control number. They must be asking for the control number because this control number will be helping the applicant so as to basically check that what information was showcased to XYZ bank when the report was drawn, so that the person A can investigate into same, and further they can be applying for justification to the CIC. They can be applying with an application to the bank over there so as to basically look further into it, right? So these are the things which can be taken care of while doing so, right? So you must be obtaining the control number and the credit information report over there. So CIR, that is a credit information report, and control number must be obtained over there, and further the disputes can be resolved with the CIC in that scenario. Okay, so that would be all related to this particular video. I hope that you must have enjoyed the content of this particular video. So do rate this video out of 10, and further, as I told you that the full course is available, and also just on sign up you'll be getting access to the PDFs over there. So you need to sign up on our website, that is jaiib.learningsessions.in. So simply visit the website jaiib.learningsessions.in and further simply sign up over there, and after sign up just navigate to the PDF section and you'll be able to access all the PDFs of all the 4 papers of Jaiib free of cost. And now you can also refer your friends, and further for each referral on sign up you'll be getting ₹20, and further if they make any purchase, for each purchase you'll be getting up to ₹500. So do refer your friends. Now that is the option is available on our website itself, so you can be visiting that particular page and further can be refer to your friends over there. So that will be all. Thank you so much and see you again in the next video.